G'day guys, welcome back to the channel. Hope you're all doing well out there. Big week, plenty happening. Price is pretty volatile. The volume's starting to tick up. We're still in that sort of long accumulation phase. You know, it's a real tough time to just sit and watch. You have big swings both ways. You sort of feel like you're treading water, which is never easy when you're trying to press forward. But on the bigger picture, so much going on in the Bitcoin space. There's ETF applications, I should say, popping up left, right, and center from every big custodian in the whole world. It is sort of crazy. There's new exchanges being approved from big institutional players. Jerome Powell's talking about Bitcoin. It is all happening. Let's jump in and check out what the word is out there on the street. So you can see basically Jerome Powell has not inadvertently, he's just said it straight out to Congress. The crypto appears to have staying power in the US economy. And I think really he is just saying Bitcoin, but they like to lump Bitcoin in with crypto so that it can be used as a negative or for scamming or whatever it is. They like to lump them all together for some reason. So it is what it is. But what happens in these situations is, and I urge you to go read some of these articles, but what happens is Bitcoin goes down every cycle. Every 4-year cycle, goes down 70+%. People think it's dead. They think it's buried. They think that it's over. And what happens is it comes out of its bear market, does 100%, has lots of volatility, goes up and down, and then, starts to look like it's got another leg in it, which of course it does. And the institutions, they were only dabbling in it last cycle. So we've got to remember that they're not used to the volatility or how it operates really, I don't think. Obviously a lot of them are, but it's different to how they treat other investments that they have. So look, it's going to be interesting. I don't know, how this plays out is just anyone's guess, but it's damn interesting to see. CNBC, they're finance gurus, so they say. This is a really interesting discussion. You have to listen to this. This is about BlackRock and their ETF proposal for a spot ETF proposal, which is huge. Listen to this now, and yeah, you've got to be bullish. You've got to be bullish. Fidelity. I'll go through them in a sec. Just watch this and have a think.
Overall ETF maven here, we have seen a spate of new Bitcoin ETF offerings recently, including from BlackRock. Even though everybody knows the SEC and Gary Gensler is completely hostile to the idea, and everybody said, well, they're going to say no to a Bitcoin ETF, just like they said no to everybody else. But I'm wondering why now? What does BlackRock think they're going to get out of this effort?
You can't get away from your favorite subject here, can you?
People ask me about it, and I don't have an easy answer for it. I always think I'm missing something here.
I think you're right. I think your sniffer
you think
usually
I'm missing
is
something?
No. I think you're onto something. I think your sniffer is always really pretty good, Bob. If BlackRock all of a sudden has filed for a Bitcoin ETF that's not futures based, it's spot Bitcoin,
right.
Okay. And Gensler said, no way, that's not going to happen. But at the same time, they're bringing together some pretty good partners from a custody standpoint. They've got Bank of New York Mellon. They've got Coinbase.
Right.
They've got an agreement, a surveillance agreement with NASDAQ to help with the security aspect of it. So they're trying to show the SEC that they're putting all the safety provisions in place to give them the confidence, to give them that acceptance of their application. I think the big thing we know is Gensler said, we're not going to do anything there unless we have the exchanges regulated, and Coinbase is not regulated.
But that's my question. Do you think this is going to change their mind? I can't without the clear regulatory authority, and they're not getting a bill through Congress. So now he's just resorted to essentially suing everybody. He's trying to regulate essentially by filing complaints.
Yeah.
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
You know, they're the behemoth, right? They're the.
That's why I'm thinking. I still don't quite get.
Yeah.
How are they going to change his mind?
I mean, if they can partner with Coinbase and say, look, you agree to get regulated, what would that do to your business? Imagine institutional investments, just 1% allocation to Coinbase, and what that would mean. We're talking about a lot of money.
Yeah.
So there are a lot of people like you that are saying, is this finally the time? Is it going to happen?
We're going to follow this very carefully, folks, because, again, they're not going to waste their time.
Yeah.
Trust me, BlackRock isn't, if they don't think they have some chance of doing something here.
So speaking of BlackRock, right, here's Larry Fink now in an interview with Mark Carney, who's the I think he's the ex-Treasury guy from the UK. Or he might be the Anyway, he's a finance guy from the UK in the public sector. So this is actually an old interview, and I have shown this before, but it's really important to hear how Larry talks about this this phase as we came through COVID and out the other side. Just listen to how he talks about it. They know, they've been planning this for a while. And as I said last week, whether FTX was an intentional crash, and all of these actions have been intentional to get Wall Street in, that wouldn't surprise me. And the approval of the ETF will sort of solidify that thought, I think. But yeah, just listen to how he describes the interest in this thing.
And now related to Bitcoin, one of my important investors was on one of the television shows the last few days, and he spoke about Bitcoin and two of, one, monetary policy, two, and three, COVID. The hits on BlackRock's on our website was 3,000 on COVID, 3,000 hits on a monetary policy, and 600,000 hits on Bitcoin. So what that tells you is Bitcoin has caught the attention and the imagination of many people. Many people are fascinated about it. Many people are excited about it, but it's still untested. It's still a pretty small market relative to other markets. It can be, we see these big giant movements every day. It's a thin market. And so can it evolve into a global market? Possibly. Certainly by evidence of the imagination of so many who want to learn about it or interested in about it, to me is a very telling sign. Another good example why understanding big data, like how many hits and all that, really is a defining statement. And so we look at it as something is real, but it's still untested. It still has many, we have to go through many markets to see if it's going to be permanently real, or it's going to be a variant of that sometime in the future.
And these are the players that are coming into this market. These people all want your Bitcoin. They want them. All of these big guys are going to be bidding for your Bitcoin. Now, there's only 21 million of these things. There's not even 21 million when you take into account Satoshi's coins and lost coins. There's just not many. Plus all of the hodlers that are holding. This is basically no coins. This is going to throw the TA, the technical analysis chartists. It's got to do them for six, because you cannot trade this. When this heats up, when the competition heats up, the God candles that we're going to have, they're going to be green and erect. They're going to be like this, up only. It's going to be insane. It is going to be insane, and it's going to be a cycle for the ages. I think I'm starting to get, I know I was getting excited last week, but you're in potentially before all of the big institutions in the entire world, all of the big banks, all of the countries. You're in before everyone. Maybe, I assume you're in. It's a very special thing. And, whether these guys want to get in lower, that wouldn't surprise me. Are they going to try to tank it? Maybe. Is there going to be lots of volatility? Maybe. But again, the best way to deal with all of this is to sit on the sideline in a hardware wallet, just watch and enjoy the ride. It's going to be up and down. It's going to be wild, but just enjoy it. This meme sums things up absolutely perfectly. This is what's going to happen. It is going to be a flood. I feel like I'm repeating myself, but I need to get this in to your head. What happens in these situations is people are like, yeah, it's okay. I can wait. And what's going to happen is the thing's going to flood. We're going to get some God candles, and it's going to be at 85K US before you know it. You got to be kicking yourself because you could have been buying them for 20K US. And, you know, you don't even have to buy one. You can buy $1,000 worth of this stuff. It's all the same. It's all the same. So look, something to think about. I mean, you just saw how much value these guys carry. Even if they put a couple of % in, then on top of this, you're going to have a lot of the pension funds. There's a whole range of money that is going to come in this cycle. It's not even a question. I mean, it's mind-bending. So the rational route helps us quantify some of these things that we've just discussed with the big institutional inflows that may happen and these ETFs that may get approved. They will get approved eventually. We know that. Why I keep saying the TA won't work, God candles are coming, and this time is different. It's sort of not different, but it is. You can see here, this ever since 2020, and you can see the halving lines here. I'll just use the cursor. Halving 1, halving 2, halving 3, the corresponding dates. And we're coming up now to halving 4, maybe, April, May of next year. We don't know yet because the blocks are still being mined. Roughly April, May. You can see here that this is the available supply for trade in orange. Now, the rational route here has done a great job with these little lines to help indicate what's happening. You can see here, this is the mining. It all comes on. There's constantly trading happening. People are using exchanges. There's just a lot of supply available to trade. Now, since 2020, basically this has been in decline, and we've gone through a huge bull market and a bear market, and we're coming down. We've gone through the bottom. We're coming out of the other side now, and yet the available supply is still going down. Now, if this continues, it's going to be approximately roughly 4 million available coins to trade, to buy the halving next year. That's not a lot of coins. That is so scarce, it's actually frightening. Every person in the world can buy this. Just let me restate what I just said. Every single person in the entire world has the ability to buy this stuff. There's nothing like that. There's nothing else like that. So when the FOMO hits, the FOMO's got to hit at some stage. The FOMO's got to be wild. It is going to be wild. And if BlackRock get approved for ETF spot, the amount of coins that are going to come off the market are going to be, they're going to scoop up as many coins as they can, as much as they can, as quickly as they can. I don't know. I have a feeling Michael Saylor, this cycle, MicroStrategy, is going to just absolutely blow up. It's going to be huge. And while all this activity is happening in Bitcoin, the IMF, the reserve banks, and mainly Europe, and look, the governments around the world, they're trying to poo-poo it. They're trying to stop you from getting in. They know it's they know it's an exit ramp. They don't want you in it. They want you stuck in their inflationary crap fiat. And they're going to blame anything and everything on the mistakes that they've made, their loose monetary policy, their longer duration, low interest rate periods, their devaluing of the currency. That's all this is. All this is devaluing of the currency, which means your money purchases less for the same amount of cash. Now, that's hard to understand because you think your house is going up in value, but it's not. The currency that it's measured in is getting debased. Listen to Lagarde here. This is Christine Lagarde. She's the head of the ECB. She has been convicted of financial crimes, but she's the head of the ECB. Interesting point to remember. This is psychotic. She's blaming anything and everything on the inflation. The European Union just went into a recession with 2 negative quarters in a row of GDP growth. This is how she's running the narrative.
Climate change affects inflation, and inflation is the beast that all central bankers, whether they wear a green jacket or not, want to tame and discipline. Number 2, because it affects our balance sheet. Whether it's a 3 trillion or a 7 trillion balance sheet, it is affected by climate change.
All right, now this is Turkey. This is the Bitcoin chart in the Turkish lira. What you need to understand is this is what happens when the currency gets debased. There is no low. This is a new high already for the Turkish lira. This is common now in about 10 countries. Bitcoin is already hitting new highs. It is the only place to store your wealth. These countries are devaluing like Argentina speed. It's just scary. And I feel so horrible for the people that live in these countries that don't know about something like Bitcoin where you can store your wealth. All you had to do was buy a little tiny bit of Bitcoin. And I mean, I don't know what 781,000 Turkish lira buys you, but my gosh, the price, I mean, it's just a scary chart to look at, to be honest with you. And inevitably, this is going to be the same chart for all of the fiat currencies around the world. And yes, that's very hard to hear, but this is exactly what's going to happen, sadly. So this chart from Stock Money Lizards really does, I think, solidify what I was talking about right at the start of the video, where we're in an accumulation sort of chop zone. And we've just got to go through this block of time. It's sort of like 18 months and it's just annoying. It's sideways chop. And you can see 19 and 20, we sort of went through this similar phase. We had a bit of a bull run early through here off the bottom. We had this run. This may have been associated with a scam that was happening overseas called the Plus token. I don't know if you know about that, but basically they were scooping up Bitcoin from people like it was going out of fashion. But as we came down, we then started to peak back up, but then we rolled over into COVID. And the rest is history from there. We had the all amazing run that we had. You can see here, there is a lot of similarities, you've got to admit. And as we roll this square in here, or as he's rolled this square in here, up to the next halving, you can see we're sort of like bouncing around this phase. And, you know, I figure that we're going to maybe tap this and maybe come back down to the center point and maybe go down to the bottom. I don't know. But all I know is that, you know, you've just got to hold through this or try to build a position. You have time up until the halving. So don't waste it. Don't waste the money. Don't waste your money. And it's always, of course, interesting to look at the correlation around between Bitcoin and the S&P 500. We go through these uncorrelated phases when we have big incidents in the chart. And, you know, inevitably for the last few years, we've had a pretty good correlation with the S&P. Now, the S&P's been absolutely pumping, as has the NASDAQ, and Bitcoin has just been going sideways. So maybe there is a little run coming up here to fill the top of that box like in the last chart. That box was at 48. I'm going to bring up the chart in a little bit, and I'm just going to talk you through some of the ideas that are floating around at the minute. So here we are. Here's the chart going back to 2019. The blue lines indicate the halving. I'll just move this over so you can see the next halving. This is a weekly, so each bar represents 1 week. Excuse my little drawings on there, but I want to keep the lines on. This is the chart that I've been using forever in all of these videos, actually. You can see our little accumulation discussion that we had through here. And, you know, there's a lot of interesting lines. These white lines represent sort of interesting positions on the chart, and they do tend to react. Now, if I zoom in, this is the halving. So this is the phase that we're in. Now, there's a good argument that we will hit the 38. This is a big line with a lot of order action. I'm not going to bring that up now, but this was a big area. And of course, this was the $48,000 big area, which is basically this phase here which shows where we tapped the top and retraced down to. So this is a huge area, and I think, look, whether we can get there, I don't know. It's only going to need a tiny little bit of good news, and we'll maybe see this before the halving and then come back down to 30. But 30 is also an absolute monster area. This was the bottom of the double top of the last cycle. This is where we spent a lot of time, and no one knew if we were going to come back up and make a new high and everything else. And we've been this, even on the way down, we had a little bit of time here. We had a month or two here, and then we've had so long now through here. We had 1, 2, 3, 4, 5, 6, 8, 9, 10, 11, 12, 13, 14, 15. We're into our 15th week through this area. And it's a huge area, obviously. So you got to assume that if we break and close maybe a weekly, maybe, a 2-day or a 3-day candle above, say, 32,000, you've got to say there's a little bit of clear air up to 38. And then I assume it goes through the same sort of thing again. But, as I said, we've just got time. We've got to do the time. So be patient and just accumulate. Just to put into perspective the performance of Bitcoin, I really do think people overlook it. It's the easiest asset to buy, really. It's the easiest asset to hold. It's very easy to do your accounting with. There's no cost to hold it. You can hold it in a sovereign manner securely without anyone else having, you're not at counterparty risk with a bank or with an exchange or with whatever. It's a very good, intelligent thing. I mean, it really is. And I've got this next two slides, this slide and the next one. Just look at the data. People refuse to buy this. It's been the best thing for 10 years. It's coming on the best thing for 15 years. And people just refuse to look at it. They refuse to buy it. I just can't work it out. It's like they hate money. It's like they hate gains. And you choose anything and have a look. You can see the daily, the weekly, the monthly, the year, the 1, 3, 5 year variation. The numbers are sickening. They make you feel sick. It's just a destruction all over the place. So, and we're in a bottom, which is even more funny. Oh dear me. So look, you can see everything you want here. You've got your industrial metals, you've got your equities, you've got your indexes here. I mean, look at it. It's just an absolute destruction. You've got your banks here. Look at this. Even old mate Buffet, he's down. They're down. They're getting crushed. And look here, we've got the real estate, absolutely crushed. These are the other indexes that cover these sectors. We've got the FANGs here. FANGs are getting crushed. Apple actually is performing okay, but we are in a down cycle. So why don't we wait till 25 to look at this again and just see how we're going. But that's not really the argument. The argument is that I think rational people, family offices, pension funds, big investors, people want a piece of the action here. Most people's objective in life is to make more money. That's just how we've been raised. And anyone that says that money doesn't create happiness is just an idiot, quite frankly, because it does. It provides you with optionality. And optionality is happiness because you can do what the fuck you want. And in the end, that's all we want in this life. We want freedom and we want flexibility. And money provides those in spades. A sweet little reminder here. This is a very important reminder. We've just compared Bitcoin to the traditional markets. Now I'm looking at it against altcoins. This is a very big trap. Altcoins are dangerous. They can work, but they're very, very, very dangerous. So the researchers here at K33 Research compared the performance of investments in Bitcoin and in the top 100 alts by market cap. Digital gold, or Bitcoin, was bought for $1,009 in January of 2015. And that right now be worth 50K, approximately. The altcoins purchased for the same amount would be valued at $6,000. So, I mean, What more do you need to hear? The king, Bitcoin king, you look at the Bitcoin dominance, go onto a chart and look at Bitcoin dominance. It's dominating the crypto market. It's not even worth looking at the other ones. There's too much risk. Just Bitcoin is enough. The gains are enough. I've been saying this for cycles now. You don't need more than the average gain per annum here. You just got to sit back and watch and embrace the change. So while I'm quickly talking about this, you can see this video spinning, and this is a reminder to you that Bitcoin in the end is up there to challenge for reserve currency status. It's a unique challenger because there is no one pushing its barrow, yet it's got to $1 trillion before, and it will get to 1 trillion again. But you can see here, and this is the reminder for people, everyone forgets this, because we have recency bias, we live in a specific period of time, and we all think that nothing has ever changed, and that it's been static forever. But that's just not the case. And you can see from this now that we've had a hell of a lot of reserve currencies, even in the last period of time. So don't assume everything's going to remain in the status quo forever. Be prepared for any outcome because stuff will change. It's just how things work. All right, I'm going to leave you there for today. And, it's going to be a big week. I know it's going to be a big week. So, buckle in, just enjoy the craziness that's coming. But I'm going to leave you with Paul Tudor Jones here. Andrew Sorkin does these interviews quite regularly. But here's PTJ, Paul Tudor Jones. He's a believer. And it's always nice to see these absolute legends of the market and trading, reaffirm their positions. He's in. And why aren't you? That's the big question. So have a good week. Good luck out there. Thanks for watching. As always, good luck. And I'll see you next week. Bye for now.
Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000-$9,000 a coin. And you said, I'm in. And I think you rode it all the way up to $60,000. And we then rode it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long, just so you know.
So what's the, you're still on the horse, though?
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future. Also, Bitcoin has a real problem because in the United States you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder. We were buying gold and Bitcoin for the inflation hedges. That game may be over. I would 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedge.